I'm giving out a mid-morning update at 8:40 a.m. Pacific Standard Time, 10/17/2011. We have a gap up in the fear. Look at when we started this rally back over on 10/3, when number one, the recession was coming off the table. That was their belief. And this went straight down. And as the fear went straight down, we made these great rallies and started. And not the ninth day of the rally was the calendar date Friday. Today is Monday, 10/17. It's the 10th day of the rally, and on the 10th day of the rally, we get a pop and a gap up on the VIX. Okay? And we have gapped up. We're above the 30 area, where every time it came down, it would pop up in volatility and then made the lower lows. So a gap up here on the VIX indicates a strong conviction that the European news is taking effect of the broader opening market, and that when this starts to pop up, especially on a gap, there has to be a reversal that comes back down. Otherwise, we don't have enough data because it's still early in the morning. This is a very serious gap for one reason, because as we all understand, volatility works both ways. If they gap up, they got to roll over like this. Okay? Because now that the 10th day so far, and the time is almost, it's 10 minutes to 12 o'clock in New York and 10 minutes to 9 in the Pacific. And it's Monday. And we have fear that is escalating from the contagion around the world. And that the IMF, they're doing their thing. And the thing about it is that that fear is factored in today. And consequently, because of that fear, that's why you're selling off over here. Even the good equities like Google that just blew out the best quarter they ever had is down 7.63 in the short term. It's because of this contagion fear. It's because of the gap up here. What we will monitor carefully within the volatility index, the fear indicator, is that, like I said, when we broke on the other side, when we gapped up above this was the peak here, and it comes right down here, and it comes right through here. We gapped up above this diagonal line. That's this big long one here. So basically, there's another gap that would have to hold that resistance, and a reversal would have to come in for the bull side of the market. Meaning that as long as this trend line right here on this fear indicator, this is where it had gapped down on 10:11 to 10:13. You can see, and then 10:13 it comes back up to the tops. But you can see the 10:11 gap down, and it came up in fear, but it made the lower low because that's when that rally was still in play on the bull side. And this was on Friday's close, is that you can clearly see that the Monday gap, that fear circulated over the weekend. And it's clearly in this sell side tape where the bull starts to think, oh my God, I got to get out. You know, they're not going to do the right thing. They're not going to get that done by November. There's all kinds of key catalysts that are driving this emotion. However, this is the gap sequence here. This is this trend line right here where I'm pointing at. This is resistance 1, and that's resistance 2. Okay? So basically, if we pull back and consolidate and hold above the gap, it's time to be getting aggressively short. Because if we build a higher base and end up breaking higher, that means that we're 10 days into this rally, bull rally, starting with IBM earnings after the close, but the quality stocks, they're selling into it. Why? Because Google had no reason to gap down to the lows. Then from that very low, run to 591, then pull back. It's holding above it. But just remember one thing, it's quality, quality, quality. And it's selling off with the broader market. It's always a leading indicator that after very good, strong earnings, that when you gap down, which we did, and we make that high, but we have pulled back and given quite a bit of that off of the high. That's because of this elevated fear level in here. And the VIX, and not only that, the VXN, because it's in both. And you can clearly see here when this chart will populate, here's the NASDAQ VIX. Same thing, VXN, NASDAQ. Here it is, NASDAQ 100 Volatility Index, and it too has this gap here on the 60-minute. We have to be mindful of it. And not only that, I will draw the same kind of trend lines that I did on the other one. And that's understanding that this gap here, right here, is where I'm going to put this right about, I would say there, at 29.89. And it's above that 30 handle. Here's that low. And when you look at it from a broader view over here, you can see where that fear indicator came in. The most important thing about this is that when you take the tops and connect them and come down like so right through here, that means that we have broke this current reversal trend when we gap up. That's what it means in phase one. We will not ignore it. Yes, it is an options expiration week, but it's a gap up, and it's above this long diagonal trend line that meets these points here, and also right on the top of that high bar and right here. So that means that the fear, if the fear is re-entering the market with this gap, then that's why equities in the 10th day of the bull run is having a problem. And in the summer rally that we did, it was like on June 23rd or 24th, well, there was a great period that we had a 10-day rally, and then it gave it back because why? That fear got back into the market. It's only day one. It's only a morning right now, half of a trading day. But we must be on high alert because this is when markets change. This needs to come back down in value, and it needs to break lower for the bull rally that started. We're in the, we're 9.5 days into it, and because of that, we have to hold support. This has got to reverse and come down here to the lower level. We're on high alert. Contagions in the market. This is the 10th day rally with the VXN and the VIX both breaking higher on gaps. And if they don't reverse, or if they reverse and come back and pull back above these key levels, then that means that fear is building again, and we would be looking at more of the short side of the market. And we are in a major earnings season, starting with IBM today, and the resolution out of Europe. It's not going to be there, obviously. People are rethinking that. And when you're selling good quality into the highs, that's always a factor that the fear is in the market.